Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the host, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Hey everyone. Welcome to Thursday morning financial planning podcast with myself, Alex. I hope everyone is doing super well. And, what has happened over the last week since last Thursday? Well, looking at the markets, we've got Bitcoin and gold hitting record highs. Amazing, right? So amazing if you're invested in those asset classes. Not so amazing if you're not. So I guess, the question becomes, are we now in the bubble territory, right? Are we now looking to kind of take a step back and say, all right, well, are these prices going to correct, right? So ultimately, just want to share a few things with you today and hopefully answer a couple of those questions and provide our views on it as well. Good morning, Margaret. Good to see you. Thank you for jumping on. So if you guys have any questions, put them in the chat. And, if you have thoughts about where things are going and where everything is at, leave them in the chat as well. And, I'll pick that up and we can have a chat about it. I guess before I dive into that, just a quick sort of reminder, something completely off topic of this for 1 minute. So I'm part of various different groups on Facebook, on Instagram, etc. The finance groups and stuff. And the common theme that I see all the time, and it kind of makes me a little bit frustrated or angry even, is that, typically you get a question, something like, hey, I'm I've got 100,000 in my account. What should I do with it? And then you just have everyone kind of pitching in and giving their opinions about it, which is, which is interesting, given that they don't actually know the person. They are giving random opinion about, something that, nowhere here or there. And then that person, the original poster, would go in and say, oh, that's a great idea, or, it doesn't suit me, in this instance. So, yeah, crazy stuff out there. So even with the podcasts like this, use it just more for entertainment purposes. Don't go out and do things on the back of, what you hear, either YouTube, Instagram, Facebook, whatever it might be. Make sure you do your own research and speak to professionals before you make any decisions. Good day, Jeff. Yeah, fiat currency. I'm about to cover on that today. So stay put. So, all right, let me come back to the topic. And the topic for today is, are we entering a bubble territory? Right. So let's have a quick look at a few things. I'll just share my screen. So where I want to start today is, I want to start with different asset classes, right? So we've spoken about what asset classes are in the past, and what they tend to do. So I just want to kind of recap on a couple of things, and start with cash, because I think that's probably that's where people typically start, right? So they start with cash, and the point that I want to raise here is really about the purchasing power of the cash that you currently hold. Again, coming back to the theme of, record high prices for Bitcoin, record high prices, gold, and other asset classes as well that I will go through in a second. Good morning, Chris. Yes, Jeff, you will. Just stay put here. I've got a couple of things for you. So perfect. So this is a graph just to show you the impact of purchasing power, literally not even over a huge period of time, right? So this is in the last sort of 3 to 4 years. And you can sort of see that, someone on an income of about 90,000, today's terms, you're looking at around between 80 to mid 80s, right? So you basically have artificially lost, $5,000 of purchasing value. You would have seen this graph before, where I've sort of talked about, the purchasing value of your cash over a longer term. And, if you look back sort of 20, 25 years, we can see that, that $10,000 in the past could have purchased so much more, whereas now, you're at sort of $6,000, $5,000 mark in terms of what that can purchase you now. So pretty crazy stuff. But, right, charts and everything are great. However, let's have a look at real life scenarios. So I just use ChatGPT for this one, because I think that's the most relevant part. So, going back to 2000s, sort of used a couple of key things, bread, milk, and a car, because I think that these are probably the most relevant items to a lot of people. So if you look back, 25 years ago, a loaf of bread was about $2.35, and now, you're paying about $4.50. So almost double where we were 25 years ago. And then with milk, slightly below that, but still, you're looking at 65% increase from $1.40 per litre up to $2.30 per litre. So, but the most important one, I think, is the car. So if you have a look at the car, right, and you probably would have realized over the last couple of years that the car prices have gone up quite significantly. And I used the Toyota Land Cruiser because I think everyone seen it, they know what the car is. I could have used any other car, but Toyota Land Cruiser, typically people buy it for the resale value or whatnot. But anyway, right? So looking back 2000s, you could pick one up for about 45,000, and now you're looking at a base level at about sort of 100,000, and then here it kind of captured the mid spec at about 120,000. So that's almost a 200% increase on where we were 25 years ago. My question to you is, has your income increased by 200%? Right? That's probably something to be mindful of. And going back to the point about cash and how it's losing value. So that is an important part to consider. So what are people doing to sort of tackle this phenomenon? Well, they're investing, right? So from cash, the next sort of asset class you've got that can go one level above cash are typically sort of fixed interest types of investments. And I've used bonds here. So I've used Australian bonds and the US bonds. So virtually the same in terms of the yields. So you currently can get a 10-year bond, which essentially means you buy a fixed interest item that will pay you 4.34% return per year over the next 10 years. And in 10 years, you get your money back. So if it's 10,000, you'll pay you 4.34% for that 10 years. And with the US, you can also see, sort of similar, sort of low fours. But the most important part that I want to show you here is really about, I couldn't get one for the Oz, but it'll be very similar to the US. But you can see that in the mid 80s to sort of early 90s, you could have gotten a much higher return on the same investment. Which at the time the question would have been, well, do I hold this, which is basically secured, right? Because you're investing your money with a government that is promising to pay you back this particular percent, as opposed to an equities market which is fluctuating, and we'll get to that in a second. So, but you can see that the yields or the return has been on its way down. It has creeped up since we had a bit of a increase in interest rates, but historically, over the last sort of 30, 40 years, it is significantly down. So if you are not happy with that, you would then go to, actually, I've got a couple of notes here. So it's safe, regular income, and what I mentioned here is that initial investment is devalued by the time it matures, which means that your $10,000 here, by the time it gets you to the end of the period, you're actually going to experience this particular event where your money worth from 10,000 over, say, that period will be only worth 6,000 in today's market. So moving on, all-time high US and Australian equities, right? Crazy stuff. I did say Bitcoin and gold, but it's also equities as well. Right, so if you look at over the last sort of 25 years, I did a snippet here. It's about 213% return over that period in the Australian market, and circa, say, 1,700%. So that's 1,700% in top 500 companies in the US, right? So virtually over the same period, right? So plus minus, but basically it's in the thousands, right? So, and you can see that, it is not a flat line. It is a line that goes up and down quite significantly. This is the GFC line here. This is the pandemic line here. So dot-com bubble somewhere around here as well would be here. So again, highly volatile. It is an asset that can appreciate in value as opposed to cash or fixed interest like bonds. And, you can also generate some income through bonds, through dividends in there as well. So let's have a look at the the things that are making the news. So gold, all-time high. So check this out, just hit over 4,000 per ounce. And Bitcoin, again, over 30,000% increase over sort of, let's just say, I don't know what the max is here. It's probably like, let's just say 10 years, right? Maybe slightly less, right? So huge returns on the back of these investments, right? So, and this is going back to what Jeff has actually mentioned earlier. He's saying that the fiat currency, which is a currency that is printed by the government, he's saying that it's toast, and it is, because ultimately, why would you be sort of exposing yourself to this scenario here, whereby whatever you're earning in a couple of years' time, you're kind of losing 10% of that, right? So as a result, you'd be tempted to go to assets that actually can give you some return, maybe not so much the bonds, but you go into more aggressive investments in equities, and other alternative investments like gold, Bitcoin. I haven't mentioned property, right? But property is also another one that is, it doesn't really give you a chart or anything like that. But as we all know, the property, especially in Australia, it's all about supply and demand. So at the moment, supply is low and demand is high. And typically, the Australian property market is deemed as relatively safe. That's on the back of, I don't think we had any sort of, monetary corrections in Australia for over 30 years. So from that perspective, it seems relatively stable too. We have gone through a couple of mining booms in the meantime that has kept us up, but ultimately, that is there also as a main asset class. So coming back to the original question, right? Are we in the bubble? Well, we could be, or we could potentially not be at all, because if the value of money is being depreciated relatively quickly, right? So we have gone through a number of money printing periods, especially over the last, really since let me just get this one. Really since this period here, right? So there's been a lot of money printing activity, and as a result, the money value has dropped significantly. But right now, the other sort of key question is about. Let me just stop sharing that. The other key sort of question is, AI is taking over essentially, right? So does that mean that we're sort of seeing the same patterns as we saw in sort of late 90s, and then that led to the dot-com bubble, which was essentially, if you had internet or any sort of IT jargon in your company name, then you would automatically be, doubling, tripling, quadrupling the value of your company just on the back of that, just because everyone was buying everything. I think the main difference now with that is, back then, the companies that were listed, they were not necessarily as cashed up, right? So number one, or profitable as the companies that are sort of comprising that right now. So if you look at the US, you've got your Facebook, Google, Apple, Nvidia, etc. Right? So all of those companies, they're sitting on a significant amount of cash, right? So we're talking billions that they're sitting on. They're also all very, very profitable, right? So, and when we talk about, the S&P 500, for example, which is the US market, the majority of the return was, generated by those sort of 10, 15 companies in that index. So So I think in terms of that AI bubble and everything, because there's a lot of money going into those sort of companies, into those stocks, from what we see anyway. We actually think that it's a slightly or significantly different landscape to what it was at that period in time. So from that perspective, we are going through that shift with AI assistance and sort of lower productivity, etc. So as a result, we actually think that the bubble may not really be a bubble as it might seem. There's a lot of things going on around the world at the moment, geopolitically, and sort of people are trying to move away from the country currency, going to the crypto. So, trying to protect and hedge their bet in terms of that. So for us, the message is always the same. You want to stay diversified. Keep different investments within your portfolio. Don't just have, equities. Don't just have property. Don't just have crypto. Have different silos with different investments in there so that if we do have a correction, and look, realistically, the question is right now, should I be investing right now, and expect a correction in the next, let's just say 5 months, right? Well, I can't answer that. No one can answer that. We can't see we don't know what the future holds. So the only thing we can say is that historically, the longer you are in the market, the better your chances of achieving a result. Whether that's, whether we're going to have a correction in the next, say, 5 months, we don't know. But if you have different asset classes doing different things for you at different points in time of the market cycle, then you will most likely hedge your bets around there as well. Good morning, Chris. Sorry, I sort of forgot to mention that. Jeff, so from what I'm seeing, everything will be tokenized on crypto, ledgers, gold, bonds, real estate, everything. Yeah, look, potentially, it's seems to be going everything digital. There's going to be digital ID coming in over the next sort of 12 months, if not sooner. Not just in Australia, but worldwide. So, everything will likely end up in some sort of digital format, perhaps. But, on that note, I just wanted to sort of give you a bit of an overview about where everything is. The markets are mostly sitting at a historic high for most of the asset classes, which is unprecedented in some sense, because typically you do have assets that are doing the opposite to what majority of the assets do. But right now, it's almost like unless you're in cash, you're probably losing quite a bit. Sorry, if you are in cash, you are losing quite a bit. But if you are in any sort of asset that is appreciating or has the ability to appreciate, then you are potentially making some ground. So, yeah, guys, again, all-time high, Bitcoin, equities, gold, potentially property as well, right? So where do you go? Are we in a bubble? Don't know. Do we stay invested? Comes down to your journey, right? So for me, sort of mid to late 30s, my journey is still another 40, 50 years. So if there's a correction, doesn't matter. Someone who is about to retire and wants to be on a bit of a more conservative side, then, you have to expect lower returns and potentially some erosion of your capital if you want to be more defensive. Otherwise, you're looking at taking on risk, which then creates a bit of volatility. So, yeah. Look, guys, I hope that has provided some insights and it was useful to you all. I guess, we'll see you guys next week on Thursday. Oh, actually, maybe not. So may or may not be able to do the next Thursday, but stay tuned. All right, guys. Thank you for jumping on, and I'll see you all next week or the week after. See you later.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.